Hello, everyone. This is Daniel Neesmith, President of Security First Asset Management. I hope, as always, you're off to a great start to your week. And we just want to touch base with you on a weekly basis to let you know how markets are doing, how the economy's going, and to give you a little refresher on the news about what's going on with current events. So, last week, we saw that the Federal Reserve decided to leave interest rates unchanged. They are pausing on the interest rates. Many people think, and Powell alluded to the fact that rising rates are obviously uh, slowing the economy down. Banks are somewhat suffering because of the rise in interest rates. We've seen several large banks fail this year. Also, we saw some good news in addition to that consumer and producer prices have been falling the last few months. So that's good news for the economy and for your wallet, your pocketbook, trying to keep more of your money when you go to the grocery store. Hopefully, the prices will continue to get back to where they should be. The other thing that we've seen is that unemployment numbers are still remaining high. We've seen they're staying around 262,000 applicants for unemployment. So the labor market, they say, continues to be strong, but we know the labor force participation rate is low, meaning the way that the government tracks who is looking for a job, the unemployment rate remains low, partially because of the fact that the participation in the labor market is very low, historically low. Around 60% of Americans are only looking for jobs of working age. So it's a mixed bag. One other major thing to consider in a broad and healthy market, you'll see many equities and many stocks that are somewhat thriving. Most of the growth on the S&P this year are being propped up by just a few companies and technology stocks. For example, Nvidia, the chip maker, has had astronomical gains in the market. Meta, Google, which is now Meta, of course, is Facebook, but Google, Apple, Microsoft, and Tesla, just those handful of stocks have pulled the S&P 500 up, but the remaining stocks have not done as well. So we're not seeing a broad market, broad, strong market across all equities. Of course, we're seeing positive gains year to date, but we remain cautious on equities. In many of our client accounts, we are going to maintain 30 to 40% money market balances in order to protect with the downside risk, because there's still issues underlining the economy that we think have to be sorted through before we see substantial growth. So if you have any questions or would like us to take a look at your portfolio, please reach out to us. As always, thank you so much for sharing us with your friends and family, and we hope to see you at one of our upcoming events. Don't forget to go to www.sfamga.com and click on events to see all of our upcoming events, and have a great rest of your week. Thank you.